Real estate is defined as the land and any permanent structures, like a home, or improvements attached to the land, whether natural or man-made. Hello and welcome to our channel. Today we are going to discuss understanding real estate. What is real estate? Real estate is a form of real property. It differs from personal property, which is not permanently attached to the land, such as vehicles, boats, jewelry, furniture, and farm equipment. The terms land, real estate, and real property are often used interchangeably, but there are distinctions. Land refers to the Earth's surface down to the center of the Earth and upward to the airspace above, including the trees, minerals, and water. The physical characteristics of land include its immobility, indestructibility, and uniqueness, where each parcel of land differs geographically. Real estate surrounds the land, plus any permanent man-made additions, such as houses and other buildings. Any additions or changes to the land that affects the property's value are called an improvement. Real property includes the land and additions to the land plus the rights inherent to its ownership and usage. What are types of real estate? Residential real estate, any property used for residential purposes. Examples include single-family homes, condos, cooperatives, duplexes, townhouses, and multi-family residences. Commercial real estate, any property used exclusively for business purposes, such as apartment complexes, gas stations, grocery stores, hospitals, hotels, offices, parking facilities, restaurants, shopping centers, stores, and theaters. Industrial real estate, any property used for manufacturing, production, distribution, storage, and research and development. Land includes undeveloped property, vacant land, and agricultural lands such as farms, orchards, ranches, and timberland. Special purpose, property used by the public, such as cemeteries, government buildings, libraries, parks, places of worship, and schools. How to invest in real estate. Some of the most common ways to invest in real estate include home ownership, investment or rental properties, and house flipping. One type of real estate investor is a real estate wholesaler who contracts a home with a seller, then finds an interested party to buy it. Real estate wholesalers generally find and contract distressed properties but don't do any renovations or additions. The earnings from investment in real estate are garnered from revenue from rent or leases, and appreciation of the real estate's value. Home appreciation relates to a house or investment property increasing in value over a period of time. A raised value of a property can lead to the owner making a profit upon selling it or earning more income through monthly rent from their tenants. Real estate is dramatically affected by its location and factors such as employment rates, the local economy, crime rates, transportation facilities, school quality, municipal services, and property taxes can affect the value of the real estate. Here are the pros and cons of real estate. Offers steady income, offers capital appreciation, diversifies portfolio, can be bought with leverage. Is usually illiquid, influenced by highly local factors, requires big initial capital outlay, and may require active management and expertise. Investing in real estate indirectly is done through a real estate investment trust, a company that holds a portfolio of income-producing real estate. There are several types of REIT, including equity, mortgage, and hybrid REIT, and are classified based on how their shares are bought and sold, such as publicly traded REIT, public non-traded REIT, and private REIT. The most popular way to invest in a REIT is to buy shares that are publicly traded on an exchange. Income from REIT is earned through dividend payments and appreciation of the shares. What is real estate development? Real estate development, or property development, includes activities that range from renovating existing buildings to the purchase of raw land and the sale of developed land or parcels to others. What's the most important thing to look for in real estate? While location is always a key consideration, there are numerous other factors that help determine if an investment is right for you. Property location. Location is still king and continues to be the most important factor for profitability in real estate investing. Proximity to amenities, green space, scenic views, and the neighborhood status factor prominently into residential property valuations. Closeness to markets, warehouses, transport hubs, freeways, and tax-exempt areas play an important role in commercial property valuations. Valuation of the property. Property valuation is important for financing during the purchase, listing price, investment analysis, insurance, and taxation. They all depend on real estate valuation. Investment purpose and investment horizon. Given the low liquidity and high value investment in real estate, a lack of clarity on purpose may lead to unexpected results, including financial distress, especially if the investment is mortgaged. Expected cash flows and profit opportunities. Cash flow refers to how much money is left after expenses. Positive cash flow is key to a good rate of return on an investment property. Be careful with leverage. Loans are convenient, but they may come at a big cost. You commit your future income to get utility today at the cost of interest spread across many years. Be sure you understand how to handle loans of this nature and avoid high levels of debt or what they call over-leverage. New construction versus existing property. New construction usually offers attractive pricing, the option to customize, and modern amenities. Risks include delays, increased costs, and the unknowns of a newly developed neighborhood. Existing properties offer convenience, faster access, established improvements, utilities, landscaping, etc., and in many cases, lower costs. Indirect investments in real estate. Managing physical properties over a long-term horizon is not for everyone. Alternatives exist that allow you to invest in the real estate sector indirectly. Your credit score. Your credit score affects your ability to qualify for a mortgage, and it impacts the terms your lender offers. If you have a higher credit score, you may get better terms, which can add up to substantial savings over time. And lastly, overall real estate market. As with other types of investments, it's good to buy low and sell high. Real estate markets fluctuate, and it pays to be aware of trends. It's also important to pay attention to mortgage rates so you can lower your financing costs, if possible. Real estate can help diversify your portfolio. In general, real estate has a low correlation with other major asset classes, so when stocks are down, real estate is often up. A real estate investment can also provide steady cash flow, substantial appreciation, tax advantages, and competitive risk-adjusted returns, making it a sound investment. Helping people provide a solid foundation for a more secure financial future. One video at a time. We appreciate you tuning in and hope to see you again soon. Hope you enjoyed this video. Feel free to click on one of our other videos. Do not forget to subscribe to our channel and do hit the bell icon on your way out. See you all next time on Top 5 Hive.